What are the tax benefits of owning your own home? I'm John C. here in sunny Southwest Florida. Today I'm going to give you 7 tax breaks that you can utilize if you own your home. First tax break, mortgage interest. Homeowners with a mortgage that went into effect before December 15th, 2017 can deduct interest on loans up to $1 million. Why is this important? The ability to deduct the interest on a mortgage continues to be a significant benefit of owning a home. And the more recent your mortgage, the greater your tax savings. Because early on in your repayment back to your lender, you are paying a large chunk of interest back to them. That is the big part of your mortgage payment every month. So because you're paying such a large chunk up front, you are able to use that as a deduction on your taxes, which, by the way, are coming up. I think they're due April 18th of 2022. Tax break number 2, property taxes. This deduction is capped at $10,000 for those married or filing jointly, no matter how high their taxes are. Why is this important? Taxpayers can take one $10,000 deduction. Just a note that property taxes are on the itemized list of all your deductions that must add up to more than your particular standard deduction to be worth your while. And remember that if you have a mortgage, your property taxes are built into your monthly payments. Tax break number 3, property mortgage insurance, also known as PMI. If you put less than 20% down on your home, odds are you're paying private mortgage insurance, which costs anywhere from 0.3% to 1.15% of your home loan. But here's some good news for PMI holders. You can deduct the interest on that insurance thanks to the Mortgage Insurance Tax Deduction Act of 2021. Which reinstated certain deductions and credits for homeowners that were set to expire in 2020. Why is this important? The PMI interest deduction is also an itemized deduction, but if you can take it, it might help push you over $25,100 of standard deductions for married couples under 65. And here's how much you'll save. If you make $100,000 and put down 5% on a $200,000 house, you'll pay about $1,500 in PMI premiums, and thus cutting your taxable income by $1,500. Tax break number 4, energy efficiency upgrades. The Residential Energy Efficiency Property Credit was a tax incentive for installing new alternative energy upgrades in a home. Most of these tax credits expired after December 16, 2016. However, 2 credits are still around. The credits for solar, electric, and solar water heating equipment are now available through December 31st, 2023. The Secure Act also retroactively reinstated a $500 deduction for certain qualified energy-efficient upgrades such as exterior windows, doors, and insulation. Why is this important? You can still save a tidy sum on your solar energy. And bonus, this is a credit, so no worrying about itemizing here. However, the percentage of the credit varies based on the installation date. For example, any equipment installed after December 31st, 2019 or before January 1st, 2023, you get a 26% expenditure, which is eligible for that credit. That figure will drop to 22% for installation after December 31st, 2022. Tax break number 5, a home office. Good news for all self-employed people whose home office is the principal place where they work. You can deduct $5 per square foot up to 300 square feet of office space, which amounts to a maximum deduction of $1,500. For those who can take the deduction, understand that there are very strict rules on what constitutes a dedicated, fully deductible home office space. The bad news for everyone forced to work at home due to COVID-19, unfortunately, if you're a W-2 employee, you're not eligible for home office deduction under the CARES Act, even if you spent most of 2021 in your home office. Tax break number 6, home improvements to age in place. To get this break, these home improvements will need to exceed 7.5% of your adjusted gross income. So if you make $60,000, this deduction kicks in only on money spent over $4,500. The cost of these improvements can result in a nice tax break for many older homeowners who plan to age in place and add renovations such as wheelchair ramp or grab bars in the bathroom. Deductible improvements might also include widening doorways, lowering cabinets or electrical fixtures, and adding stair lifts. You'll need a letter from your doctor to prove these changes were medically necessary. Tax break number 7, interest on a home equity line of credit, also known as a HELOC. If you have a home equity line of credit, the interest you pay on that loan is deductible only if the loan is used specifically to buy, build, or improve a property, according to the IRS. So you'll save cash if your home's crying out for a kitchen overhaul or a half bath. But you can't use your home as a piggy bank to pay for college or throw a wedding. You can deduct only up to $750,000. That is the cap, and this is for the amount you pay in interest on your home equity line of credit and mortgage combined. I hope from these 7 tax breaks you can definitely jump in and utilize many of them, as they will help save money in your pocket and not give it to the IRS. Please do that. Check with your CPA. If you need help finding a good CPA, call, text, or email me. I've got 2 here in Southwest Florida that I can recommend you to. I'm John C. here in sunny Southwest Florida. Have a great week.